ever wondered how giant business groups like Tata, Reliance, or Aditya Birla manage to be everywhere at once? They don't stick to just one industry. They run everything from telecom to finance to cement. These are called conglomerates, and the Baroda BNP Paribas Business Conglomerates Fund is built around them. But should you consider it? Let us break it down in an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand a few basic details about it. So, as this is an NFO, it opens on 2nd September 2025 and closes on 15 September 2025. And some of the key features of this fund is it is an open-ended fund type. It belongs to the category of equity thematic, and it has BSE Select Business Groups TRI as its benchmark index, and also a 1% for redemption will apply as exit load if you choose to redeem it within 1 year. There is no entry load, but the minimum investment amount to stay invested is 1000 rupees. So the fund managers for this NFO are Mr. Jitendra Sriram and Mr. Kushant Arora. According to the riskometer, the risk involved in this fund is very high. So the primary investment objective of this fund is that it seeks to achieve long-term capital appreciation by investing in equity and equity-related securities of companies that are part of business conglomerates of India. So now, as we have a basic understanding about this NFO, let us move on to the analysis part. So here we are going to first take a look at the advantages. So number one, diversification across sectors. Isn't it safer when one business group is spread across multiple industries? That way, even if one sector slows down, another might keep the group strong. Number two, strong management. Don't big names usually bring stability and trusted leadership? That's the advantage of investing in large proven business houses. Number three, riding India's growth. If India's economy grows, who do you think benefits across industries? Exactly, these conglomerates. So since they have their hands in multiple businesses. And number four, professional management. Wouldn't you prefer experts allocating money strategically instead of guessing on their own? So that's where fund managers step in. So now let us take a look at the disadvantages. Number one, concentration risk. What happens if the fund is too focused on just a few business groups? That could mean higher risk. So that's a disadvantage. Number two, underperformance risk. And if those big groups don't do well, do you think the fund can magically escape? Not really. It will definitely reflect in returns. And number three, sector overlap. What if many conglomerates have stakes in the same industries? Then true diversification may not be as strong as it looks. And number four, limited track record. Finally, would you rather trust a well-tested fund or a new theme that still has to prove itself over time? So before investing, ask yourself, does this fund really match your goals and your risk appetite? So what is the final takeaway? At the end of the day, every NFO comes with shiny promises. But do you really need to rush into something untested? Unlike established funds, NFOs don't have a track record. And in investing, history often tells you more than just hype. So before jumping in, always ask, why take a chance on something new when proven funds with solid performance are already available? So our personal recommendation is that if you are a first time investor or even a conservative investor, you should definitely avoid investing in an NFO. Also, if you're looking for funds to add to your core portfolio, you can definitely avoid investing because we do not know how it is going to perform yet. And if you do add to your core portfolio and then it underperforms, it will definitely impact the returns overall in your portfolio. But still, if you do want to invest in a similar theme, there are other similar existing thematic funds with a track record where you can see how it has performed in all cycles and will be able to take a calculated risk instead of a blind risk. And also you can avoid an NFO like this if you do not know when to enter and exit from a thematic fund, which is even harder even for a seasoned investor. So if you do want professional guidance, you should consult with a financial planner who will look into the suitability of this fund's investment objective, risk profile, overlap ratio and allocation, and help you suggest other funds or something which can help align your financial goals with your investment.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, We also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.